With banks locked into above 13% on the various OMO bills and present oil prices offering some respite for the Naira, I will be speaking to Kubi Momo, the head of market risk at UBA, to review the Nigerian fixed income market. Well, thank you so much for joining us, Kubi. The Naira has been under some pressure of late. I mean, the CBN has struggled to keep it within the recommended band, that is the range of 152 to 158 Naira to a dollar. Now, what are your thoughts on the Naira going on the long term?
Hello, Onye. Well, over the medium term, a lot will depend. It will depend on two things. It will depend on what we see from the portfolio investors, and then it will also depend on the recent oil price increase, whether those will be sustained, maybe partly due to events happening in the West, and then plus, of course, the crisis in Egypt. So if there's some sustenance of the increased prices, the Naira tends to be under less pressure. We earn revenue faster. That will definitely aid the CBN in its stance. But yes, I have to say, in the last 1 month plus, it has been very tough for them to keep the Naira where they've wanted. They've had to intervene several times in the market to calm nerves, and generally the Naira has slipped above the 160 range in the interbank market.
We're still on the volatility of the Naira. Now, how do you think this will impact on the next Monetary Policy Committee meeting?
Well, one of the things we're not likely to see, in terms of what will not happen, we're not likely to see the net open position limit of 1% change. That's not likely to happen. At the same time, we're also not likely to see an easing of monetary policy. Not likely. It's something that, has been speculated from the beginning of the year. I think analysts got it right at the last meeting when everybody now realized it was likely to stay the same. The question is, will we see a tightening of the CRR? We can't be sure. Maybe closer to the meeting, there'll be some kind of analysis around this. But for now, what we know we're not likely to see is easier exchange regulations and a loosening monetary policy.
Well, can you give us an update on the primary auction results?
Well, the results are pretty stable compared with the last auction we had. We had 11.5% for the 91 days and 12.75% for 182, which is slightly down, just 0.1 basis points down for 91 and 0.01 for 182, which means some stability. And that shows through in the secondary market trading. On the secondary market side, we've seen yields go quite high in between the two auctions. I think yields, or rather maybe around the second auction, yields were above 13%, but we're seeing some kind of softening. We're looking at the higher 12 point something now, and then the 91 days even a bit lower than that. So there's been some softening in the market, and we've seen it come through at the auction.
All right. Now, with banks recently locked in above 13% on the OMO bills last week, could you talk us through what is happening in that space?
Well, there were a lot of OMO maturities last week, and then there was a lot of liquidity in the system because of the expectations for FAC. So that was a strategy by central bank to make sure that there's no excess liquidity. The rates were extremely attractive to banks. You're getting 13.2 or 13.21% for 220 days or 200-day bills. That's really attractive because the effective yield brings you, I think it even brings you above 14. So those kind of rates are very good. The strategy definitely worked in terms of taking out liquidity. And every time you take out liquidity like that, it reduces pressure on the foreign currency, on the currency. And going into this week, there's been some appreciation on the value of the Naira. We had seen 162, 163 in June. What we're seeing now is maybe about 161. Again, there have been some sales by oil majors, so we're seeing the currency trending at about the 161 level, which is a lot more comfortable for everybody.